From the following information, find out missing figures and rewrite the balance sheet. Current ratio we've been given as 2:1. Alright, so remember the current ratio, right? And may as well start from, okay, so all of this we can use for our working. Current ratio is equal to current assets upon current liabilities, which they're saying is 2:1. Quick ratio, which we know is quick assets upon quick liabilities, they're telling us is 5:3. Reserves and surplus are 50% of share capital. Okay, so 50% of this. Similarly, long-term loan is 60% of equity. Okay, 60% of equity. And the word equity is not the same as equity share capital. Equity would mean both of these items. Alright, so we have some information here based on which we can actually complete this. Stock turnover ratio or inventory turnover ratio, whatever you want to call it, okay, is equal to cost of sales or cost of goods sold, depending on what's in the question, upon, you would normally take average inventory. In this particular question, it makes sense to take average inventory because we've been given some information about opening stock and closing stock. Okay, and I've called it inventory. Inventory stock is one and the same. Okay, so this number is 10. Then they're saying that gross profit ratio on sales is 20%. Okay, so remember, gross profit ratio is equal to gross profit upon sales into 100. Okay, so 20 is equal to gross profit upon sales into 100. Then they've told us that sales is 15,62,500. So 20 is equal to gross profit upon 15,62,500 into 100. And now we can solve for gross profit. Okay, this number here is division, goes that side, becomes multiplication. Okay, the 100 that you see over here, okay, I'm writing this a little more clearly. 100 that you see over here is multiplication, goes down, it becomes division. Anyway, so gross profit is equal to 15,62,500. Okay, and I'm going to make some space for this. 15,62,500 into 20 upon 100. So gross profit will equal 15,62,500 into 20 by 100. And so we end up with 3,12,500. 3,12,500. Also remember that sales is equal to cost of sales or cost of goods sold, again depending on the words in the question, plus gross profit. So I know that the sales is 15,62,500. Okay, cost of sales we need to find, so we'll keep that as is. Okay, plus 3,12,500. So cost of sales is going to be 15,62,500 minus 3,12,500. Okay, so I already have 3,12,500 here. So minus 15,62,500 gives me 12,50,000. Okay, and that 12,50,000 is what I can now use here. Okay, so I'm going to scroll down just a bit. Okay, so cost of sales is 12,50,000. Now stock turnover ratio is equal to cost of sales upon average stock okay, which gives us 10 is equal to cost of sales. Okay, and cost of sales we have, so 12,50,000 upon average stock, which we can further solve. Okay, we can further solve as average stock is equal to 12,50,000 upon 10, and therefore finally average stock. Alright, so let's see. Alright, average stock gives us 1,25,000. Simply divide. Now, we have dealt effectively with this. We still need to calculate cash sales and credit sales, which I guess we may as well do now. Okay, so they've told us that cash sales is 25% of the total sales. So cash sales is equal to 25% of 15,62,500. Okay, so cash sales is going to give me 15,62,500 into 25 by 100. Okay, so 3,96,500. 3,96,500. Okay, and next we have credit sales. So if we've got ourselves cash sales, we can simply subtract to get credit sales. So credit sales is equal to total sales minus cash sales, which is equal to 15,62,500 minus 3,90,000 minus 3,96,2,500. Okay, which gives us okay 15,62,500 minus 3,96,2,500 gives us this number 11,71,875. Also, we can multiply 15,62,500 into 75%. 100 minus 25 gives us 25%. Okay, and we should get the same number, which we do. 11,71,875. 11,71,875. Now, going back up here, they've said closing stock is 50,000 more than opening stock. Okay, so I need to convert that into an equation. One more time, closing stock is 50,000 more than opening stock. So opening stock plus 50,000. I have that as one equation, which I'm going to rewrite downstairs. Okay, so closing stock is equal to opening stock plus 50,000. Closing stock is equal to opening stock plus 50,000. And the second time around, I also have average stock. And understand this, average stock. Okay, average stock is nothing but opening stock plus closing stock upon 2. So average stock is equal to 1,25,000. So I have one equation which I'm going to rewrite a little bit. Okay, I can say that closing stock minus opening stock is equal to 50,000. Or if you really want to stick to opening stock being positive, it's going to be a little more annoying, we may as well stick to this solid because you will have two negatives in your equation. Anyway, our second equation, this 2 over years division goes outside, it becomes multiplication. So we can say that opening stock plus closing stock is equal to 2 into 1,25,000, which gives us 2,50,000. Now, we can simply solve this by rewriting. Okay, so we can simply put this down in as minus opening stock plus closing stock is equal to 50, and simply add the two equations. Alright, so opening stock minus opening stock 0, closing stock plus closing stock is 2 times closing stock is equal to 2,50,000 plus 50,000, which gives us 3 lakhs. Okay, and then we can get closing stock as 1,50,000. If you're not happy with doing this, simply write this one as closing stock is equal to 50,000 plus opening stock, which is I think what we started with. And now we can substitute this equation over here. Alright, so that means we can say that opening stock plus 50,000 plus opening stock, okay, is equal to 2,50,000. Alright, so continuing here, we could then imply that 2 times opening stock is equal to 2,50,000 minus 50,000. Okay, and then again 2 times opening stock is equal to 2 lakhs, and therefore opening stock is equal to 1 lakh. Now if I've got myself opening stock, now I can find myself closing stock. Okay, so I'm going to stick with this equation over here. So I know that closing stock is equal to opening stock plus 50,000, and therefore closing stock is equal to 1 lakh plus 50,000, which gives me 1,50,000. So it doesn't matter which method you use, simultaneous or you simply substitute. Either way, you're going to get the same answer. Closing stock, by the way, is one of the items here. So I'm going to go ahead and put 1,50,000 in the balance sheet. Okay, so 1,50,000 done. Next, we already have low hanging fruit. I'm going down and finishing off the little bit that's left. Okay, so we have closing stock looked after. Alright, and then they said accumulated depreciation is 1/6 of the fixed assets. Okay, so that is going to come in later, and I'm just going to, for now, just write 1/6 of fixed assets. Okay, now what about the rest? We've been told that equity, long-term debt, is 60% of equity. Okay, how much is long-term debt? There's only one long-term debt item over here, which is long-term loans, which is 9 lakhs. Okay, so it's as good as saying, and let's see, it's as good as saying that 9 lakhs corresponds to 60%. Therefore, these two together, 100%, is X. And I'm going to cross multiply and calculate that equity portion. Okay, so I'm going to say that equity is equal to 100 into 9 lakhs divided by 60. Okay, so 100 into 9 lakhs divided by 60 gives you 15 lakhs. Okay, but that 15 lakhs is your full equity. What you need is the amount that will go for equity, share capital, and reserves and surplus. And since they said it's going to be 50%, reserves and surplus is going to be 50% of equity share capital. Okay, so we can again write this down. Okay, and I know I'm squeezing in all these calculations. Okay, but if one item is 50%, that means the other item is going to be 100%. So 150% is what corresponds to the 15 lakhs that we just got over here. Okay, so corresponds to 15 lakhs. Therefore, 100 is going to be X. Okay, 50 is going to be Y. If you want cross multiply, I mean, looking at it only, you can make out that this is going to be 10 lakhs and this is going to be 5 lakhs. Okay, so moving in here, this guy becomes 10 lakhs. This guy becomes 5 lakhs. Okay, I'm getting rid of the X that I mentioned before. I'm also getting rid of the question marks. Right. So now that we're done with most of the liability side, we can deal with the data they've given us upstairs with regard to the current assets and current liabilities, because we do not have full data. We do not have full data when it comes to calculation of cash. Okay, so there is a part of the current assets which we do not know. Okay, and there is a part of the current liabilities also that we do not know. Right, so I'm going to go slightly on this side because we need to elaborate exactly what are quick assets and quick liabilities based on the data we have. So first of all, current assets upon current liabilities is equal to 2 by 1. Okay, but the 2 by 1 is equal to what? In the numerator, current assets are only these 3 items: stock, debtors, cash. Okay, so we have stock plus debtors plus cash in the numerator, and in the denominator we have bank overdraft and creditors. Okay, so bank overdraft plus creditors. This is what we have as far as the current assets are concerned. And current liabilities, for quick assets, you need to remember that stock is a non-quick asset. Similarly, bank overdraft is a non-quick liability, so they are not counted. They are not counted. So in quick assets, we only now have debtors and cash. And in the quick liabilities, the only thing we have is creditors. Okay, and maybe using these two equations, somehow we can solve and calculate these values. Okay, so what numbers we have, I'm going to substitute. Bank overdraft is 50,000. Creditors we do not know. Okay, so I'm going all the way till here. Okay, so we are saying that, remember, 2 is to 1, 2 by 1, I'm just going to write 2. 2 is equal to stock, 1,50,000. Debtors, 2 lakhs. Cash is unknown, so I'm just going to write CASH upon our current liabilities. And in current liabilities, we have bank overdraft 50,000 and creditors are not known. Okay, so bank overdraft, which is 50,000, but we do not know creditors. So we have one equation where 2 is equal to this. Okay, and our second equation, we are going to say 5 by 3 is equal to debtors plus cash. Okay, so debtors is 2 lakhs, debtors is 2 lakhs, and cash is again unknown, upon the only thing we have this time is creditors, which again is unknown. But I think this is enough of data for us to solve simultaneously and get an answer. Okay, so I'm again simplifying both of these one more time. We are saying that 2 is equal to 1,50,000 plus 2 lakhs gives us 3,50,000 plus cash upon 50,000 plus creditors. Similarly, we can say that 5 by 3 is equal to 2 lakhs plus cash upon creditors. Now, how do we solve this further? Okay, I am going to make columns for each. Alright, so let's see. We have, alright, so we're going to continue with this. We're going to continue with this over here. Okay, so remember this 50,000 plus creditors is division. It goes that side, it becomes multiplication. Okay, so I can say 2 open bracket 50,000 plus creditors is equal to 3,50,000 plus cash. Similarly, creditors over years division goes that side, it becomes multiplication. 3 over years division goes that side, becomes multiplication. So I have 5 times creditors. 5 times creditors is equal to 3 times 2 lakhs plus cash. Okay, and now we multiply inside. So like this and like that. Okay, so we get 1 lakh plus 2 times creditors is equal to 3,50,000 plus cash. And similarly, over here, 5 times creditors is equal to 6 lakhs plus 3 times cash. Now we can write these one below the other. Let's keep cash and creditors on one side, numbers on the other side. Alright, so we have 2 times creditors minus cash is equal to 3,50,000 minus 1 lakh. So I'm going to directly write 2,50,000. Similarly, we can write 5 times creditors minus 3 times cash is equal to 6 lakhs. Okay, and that is what I'm going to write over here. So 5 times creditors minus 3 times cash is equal to 6 lakhs. Okay, and now we multiply the upper equation. Okay, it would be most convenient to multiply this entire equation by 3. Okay, and the reason for that is now it will become 6 times creditors, okay, minus 3 times cash, which is equal to 7,50,000. And now for the last part, we are going to go ahead and subtract one from the other, and it doesn't matter even if it goes into negative, ultimately it'll become positive. Don't take tension. Okay, so 6 times creditors will become minus 6 times creditors, minus 3 cash will become plus, minus 7,50,000 become minus 7,50,000. Okay, and so now we solve. So 5 minus 6 gives us minus 1 times creditors, minus 3 plus 3 gives us 0. 6 minus 7,50,000 gives us minus 1,50,000. So creditors is 1,50,000. And as far as cash is concerned, okay, so I want a simple equation for cash. So that simple equation can simply be 2 times creditors minus cash. I already have creditors. Okay, so I'm making use of this. I'm making use of this equation. Okay, so since 2 times creditors minus cash is equal to 2,50,000. Okay, that implies, okay, 2 times 1,50,000 minus cash is equal to 2,50,000, is equal to 2,50,000. Okay, so that means 3 lakhs minus cash is equal to 2,50,000. 2,50,000 is positive, goes that side, becomes negative. Cash is negative, goes that side, becomes positive. So ultimately we have 3 lakhs minus 2,50,000 is equal to cash, and therefore cash is equal to 50,000. So we have creditors 1,50,000, cash 50,000, right? Cash 50,000, creditors 1,50,000. And if you notice, the liability side is now complete, so we can find the total. All right, so we have with us 10 lakhs. Okay, 10 lakhs plus 5 lakhs plus 9 lakhs plus 50,000 plus 1,50,000. Okay, so we have 26 lakhs on the liability side, and the balance sheet by definition will always balance. Okay, so the 26 lakhs here I can also write here. So this side is also equal to 26 lakhs. And now I can subtract the remaining items to get hold of the value of fixed assets minus depreciation. Okay, so 26 lakhs minus 50,000 minus 2 lakhs minus 1,50,000 gives us 22 lakhs. Okay, and 22 lakhs is our value outside over here. But there are question marks within as well. And remember how I wrote this as 1 by 6. Why have I written it as 1 by 6? Because they have said it is 1 by 6. Okay, they've said that the accumulated depreciation is 1/6 of the fixed assets. So let's take the fixed assets as X. Okay, so if that's the case, if we're taking fixed assets as X, okay, then the accumulated depreciation will be 1/6 of X. Okay, so cost of fixed assets is X, accumulated depreciation will be 1/6 of X, or simply X by 6. And then we know that the net value of fixed assets is 22 lakhs. So I can say that X minus X by 6 is equal to 22 lakhs. Now, solving for this, I'm going to end up with, let's see. Okay, for those of you who are weak in maths, just remember, I want 6 in the denominator. Right now it's X by 1. So I'll multiply both the numerator and denominator by 6. So I get 6x by 6. Okay, now the moment the denominator becomes the same, then they can join also like this. Alright, so 6x minus x is equal to 22 lakhs. Okay, and solving it further, I'm going to get 5x upon 6 is equal to 22 lakhs, and therefore x is equal to 22 lakhs into 6 upon 5. Okay, so my cost of fixed assets is going to be this number. 22 lakhs into 6 upon 5, which gives me 26 lakh 40,000. Okay, 26 lakh 40,000. Okay, over here. Okay, so and again I'm going to erase all of this, no longer required. This number is 26 lakh 40,000, and this number is going to be 1/6 of this. So into 1 by 6, which gives me 4 lakh 40,000. 4 lakh 40,000. With that, we are done. I hope you have found this video useful. I know it has been a rather long video, and in case you have any doubts, feel free to message. And if you've liked this video, please like, share, and subscribe. Thank you.